Hey everyone, welcome to your daily update for Sol and BTC. We said yesterday I wasn't going to open anything big. Just the monthly close was okay, but not great, and because we had the weekly close today, it was just probably better to sit and wait. So won't go too much into liquidity. If you look at the 1 day, it's basically just people are opening longs. They've taken them a couple of times, just the real high risk stuff that people have opened up in close proximity. And every time we get kind of a little shift off the bottom, people just open a few more. So most of the lower risk stuff hasn't been touched since it's been open, but we still have these shorts that may still play out down into those sort of mid 70s again. It's having quite a bit of time yesterday, I've gone through and actually found some very strange stuff. So, some of the index charts that exist on TradingView actually have the 4-month moves and stuff like that have just played out, to the cent. But then looking across the exchanges don't seem to have the same levels, so it's a little bit tricky. But I think it's just a case of wait for something clearer. And if I had to just take a guess at it, I'd say that we haven't finished going down. So, yeah, we won't go too much into liquidity. The daily is just basically building up, people opening longs, haven't really bounced. And if you look at any other time frame, there's just going to be a lot more to the upside. But like I've said, the last couple of days doesn't mean we're going up. Okay, let's have a look at Sol BTC. So it's just been in a holding pattern since yesterday, just bounced between the two origins, so that's a pretty typical move. Still holding the range trend. Pretty neutral if it closes here. Bearish, obviously, if it closes below 13042, and bullish if it has some kind of pump and just gets back up above any of the horizontal levels. However, we are hard closing levels like 13718 by closing as a blue candle, if that's how it closes today. So, any kind of pump is really just a retest of hard close broken levels. Overall, there's nothing in that chart that says the price is going to go up. So that's the daily. If we look at the weekly, similar thing, except the weekly hasn't really bounced yet. So the 12780 was the first touch of an origin, and it has bounced. Now, I mean, if you'd switched all of your Bitcoin into Sol at that particular moment, you would have had a better win out of it. If you switch back now, that's kind of the whole point of these pair charts. But in the scheme of things, this is not really bouncing like you'd expect it to. So we might. If there is a dump, just a real sudden dump before the end of the day, and it opens the next candle below this 12780 level, then that's very bearish. If it closes here, it could push back up to try and retest things. There's levels like 13718, 14125. Those types of levels are getting hard closed today. We're still under the downtrend. We're very far away from it. It's pretty hard to get bullish about what you see here at this stage, and we're even back underneath things like some of the older range trends. So yeah, the weekly just looks pretty average. If it was to recover from here, which it can do, it can create a range by touching this origin if the next week engulfs. So that means the next week has to close completely over the wick of the candle, so back up inside 14341 basically, and then you would chuck your fib tool on here, wick to wick, and this would give you the various different range levels. I sort of look at this and go, do any of these really have confluence? And they don't really line up with much. Like, this doesn't really line up with the break level, which is up a bit higher, or the higher break levels. This is kind of in the middle of the hold. It's not really at the bearish end or the greedy end, and nothing lines up here, nothing. So it's just like, I look at that and just go, okay, my best estimate is it's not going to be engulfing that candle next week, but could be wrong. They don't always line up, but typically they would. Okay, just recapping the monthly close, just so you can see why it wasn't worth doing anything. So we closed below a break, which it's gone up and rejected off pretty much, and it's just grinding down. We closed inside a range level, so distribution range level, and we closed, or we moved the trend, which we haven't touched yet. So, so yeah, we're kind of still in a situation of, well, we could just come down a little bit more, tap this trend, and because nothing is hard closed, and because it's so early in the month, nothing stops us from actually pushing back up. And we could do something like retest prior broken trend, which would be a bit of a bullish run for Sol. We could push all the way back up. Like this is actually, legit. You can push all the way back up to these range levels at 16419, and then you can come all the way back down again, before the end of the month. So you could see a bit of a pump and liquidation event of shorts. Now, likewise, because it's quite early in the month, nothing stops us from bouncing off this break and pushing all the way through this trend. So it's really just not a great place. Now, we have things like this 11083 break level here, which is a hard close break level for retest. So like if I had to put a bullish hat on, and what I mean is by that is a bullish move that might then give us continuation, I'd actually rather see this come down, do the retest of this break level within this month, and then push back up to recover these levels and close back inside here next month. That actually is, quite a bullish move. You go down, you meet your obligations to retest prior broken levels, and then you recover from those, and then you close the candle, and maybe then you get some more upside. But yeah, that's the bullish cap. Other than that, we just have to look at it as what it is, and that's that it's it closed under a break level. It's more likely to keep going down. Okay, let's have a look at the safety assets. So unless something really big changes here in the next 2 hours and 38 minutes, this is going to hard close a pretty old origin level. So this is kind of like what cup and handles. I don't like a lot of these pattern terms, but this is sort of like what cup and handles are. You've got your big drawdown here. You come up, your retracement, which doesn't go as far, and now potentially your hard close, and then your break, right? Push to the upside. So this could imply a large dump coming for risk assets. So that's that's all that is. Okay, and that sort of lines up as well here with the weekly. And the weekly's a hard close of the bottom origin. It's not a hard close of the break. It's back up, or it's actually now inside the pivot level for the weekly range. But once again, it's looking pretty bearish. And the top of that range like roughly lines up with whatever stopped that from breaking higher on that 1010 dump, which could be this older range back in here. So yeah, that's definitely looking like an origin break. It's not a trend break. Well, it is of the interior, but not of the exterior. It's probably going to push up. It's still holding the uptrend. It's just bearish close. Good close for safety assets, bad close for everything else. Recapping the monthly. Monthly was just kind of right on the fence, so I just put it in the Discord that this is basically just a joke, because it opened just right here on the range trend. I suppose if you went into the micro detail of it, this would have been just above the trend, and hence it's pushing up at the moment. So we've got range levels in here that could stop it. They're 70s. We've got the backside of the support trend that could stop it, also in the 70s. And then, of course, it's up into that 72 area if it just keeps pushing up to the break. So we've already tested the hold. So there is a reverse hold level around 71. There's the break level up there at about 72. So they're all things that it could head towards if it just keeps pushing up. And once again, that would be epic fail for altcoins. Okay, let's have a look at the totals. So the first thing I look at when I see the 1 day totals here is I see we've rejected from closing under the break. We've come down and we're holding the next break. Now, none of these are actually origins. So we are going to hard close a lot. So we're going to hard close. We're going to shift trend to the bottom side of the candle from up here. The trend could bounce us back to do a retest of quite a bit of stuff, to be fair. Like we've got retests actually all the way up higher. But if they do want to make this bearish, they're going to push that down. They'll push it below the break level, and then it'll have the range trend and the origin down there at about 2.24. So it's a bit of a weird one just to be bouncing between two breaks like that. But yeah, once the trend shifts, might get a bit of a bounce. Would it recover from there? Probably not. It may, like I say, bounce, but it's really just taken off. Yeah, what does the weekly look like? Yeah, okay. So the weekly is just sitting just above the origin, and it's below the range level, it's below a range trend, it's hard closing and losing the higher origin level. So this is going to be like, if there is going to be some kind of liquidation of the shorts that are in relative close proximity to current price, it's probably going to be a move from closing inside this origin and then at max retesting this 2.63. So that's 2.24 to 2.63, which is a pretty decent move. But if they want this to be bearish, there's plenty of ways they can just reject. So 2.34, if it closes under the pivot level of the distribution range, then it can just continue to go down. So then 2.09 becomes the next level, and then 1.84. We have a range trend there. So that range trend is 2.38. We have the prior broken interior trend, which it seems to be going back under. So that's about 2.44. Another range trend at 2.51. Another range level at 2.6. There's a lot of things that could just reject off. It doesn't actually. It would be super bullish, or more a case of just they want to liquidate some shorts if it did pump up beyond any of these sort of minimum levels. There will be a trend shift to the bottom of the candle. At this stage, the wick is long enough that might give it that support to actually do that little bit of a bounce. But if it wants to be really bearish, there'll just be a sell down prior to close. They could, if they take it down below 2.24 and eliminate the wick on the bottom of the candle, and then shift the trend to the bottom of the candle, open on the wrong side of the trend, on the wrong side of the origin, it's just going to be another dump. So just keep that in mind. And that is about all that there is going on there. Okay, quick monthly recap. So we're pushing down below the 6-month prior broken trend. This is bigger than monthly, but it just makes a lot of sense for things to continue to be bearish at least until we do this retest of the 6-month break level. So it is hard close, so we could technically hit that and bounce, but 2.16 on the really big scheme of things. And looking over at the monthly close was kind of a no man's land, and it hasn't shifted trends. It hasn't moved up to test the range trend, which it's below currently, not hard close, but below. It hasn't touched either side of the range bracket yet either. So this 2.25 and 2.68 would be the monthly range bracket that it opened in. So yeah, if we can push down, and even if we can just work through, complete that 6 month, and then maybe you'll get that bounce up to liquidate the shorts up to that 2.68. It's just kind of no man's land on the monthly there. Okay, daily with BTC taken out and a bit more risk. Hasn't really gone down to where I would expect it to go to yet. So you can see with the alts, they went up, rejected off the topside origin here at about 788 billion, and now we've come, or are just more or less just grinding down. So we are below an old range support level, which is that 575 billion, and our next origin is down there at 736, or is that just a break? Let's just double check that. Yeah, in range origin. So it's had its first touch, it's had its first bounce. So this is kind of, the how you can go long for a bit. When that bounced and it went back up here and hit the first resistance of like for like, and then after that resistance yesterday we didn't close above the level, so then therefore we are pushing back down. So this is probably just going to keep breaking down, and if that origin doesn't hold it the second time, then because the trade really is only on the first touch, that's the time that it's generally going to always bounce, then it's going to come down to the range level here at 719.39, and then potentially, if that doesn't hold, lose that old range. And then we've got the range trends down here at about the 699, so it's all looking pretty bearish at this stage, bit more downside. Posted this one in the Discord earlier today, so this is the weekly interior trend for the close today. Looks like it's going to, at this point, unless it does pump back up in the next 2 hours and 28 minutes, it may close under this. So you could get like a couple of scenarios here actually. You can have a slight relief pump after the weekly open, but it only really has to just go back up to this trend, which is a very small little move. And then after that, it could hit that and then keep coming down to actually test the origins, which it hasn't tested. Then, yep, you can get a bounce off those, and then maybe you get a bit more of a pump back up to the break level, which it's breaking, or the trend again. It's all possible. So, and if you were to get a bit of a move up prior to the close of today, we can bounce off this trend and then come back up here to that 799. So that's also a possible move. And we can also open, sweep to the upside, hit the 799 range level, and then come back down to the 704 range level. Another possible move. So very, very similar to the structure on the monthly, actually. It's kind of opening the weekly in the middle. So it has the ability to take one side and then the other. Which way does it go first? Well, if they want to reverse price from here, it'll probably go down first. And that means they take out the last of the longs and any of the slightly older longs that are sitting, below the previous lows for the week, and then they might bounce back up. These origins down here, they can create ranges. So you've got this kind of close. If it sweeps the lows first, comes back up and engulfs the weekly, it could go up, and it could be a violent sweep, like because you've got a range trend for retest down here, you've got an origin down here, you've got the completion of the distribution range would be down here at 610. So that could be the one last big violent sweep down, and then maybe a decent bounce. So yeah, that's our weekly. Recapping the monthly, It's just weird. Actually, the weekly, I took some screenshots of this stuff the other day, and this candle's changed. Can't even trust TradingView, but the monthly hasn't. So see this offset on the monthly. I don't really know what quite to make of that. There's no offsets on this entire chart other than the dump. Anyway, so this kind of, it opened above a range level, which actually means it could bounce back up to the prior one, which hasn't been retested. So I really don't know what to make of that. It's maybe in the next couple of days this chart will just change and that candle will be below that level, because it closed below the level, opened above the level, and that's not a small difference. You know, you're talking 838 billion and 779 billion. So there's quite a few billion that just magically raised in price, in the moment that the monthly changed. Yeah. So I imagine this is all going to change, much like the weekly has changed since we took the screenshots and posted them in the Discord. So we'll see how this goes. Yeah, so at this stage, the monthly recap is kind of saying this is weird, but one way or another, it's still a hard close of the topside range trend. So you could get a bounce back up to that to retest. It hasn't hard closed the break level, so that's still technically can recover from this. It has been hugging and just sort of bouncing off the prior broken trend. So, yep, could still get a bounce. And assuming that this candle, let's just say based off close rather than open, if it's based off close and this magically changes soon and it's below this 806 level, then that's quite bearish, because it's going to want to try and push down then to that 554 on the monthly. And we've still got the monthly origin down there, which hasn't been tested yet as well. So there is quite a bit of support like down in this lower area. So it could just be a case of, yeah, don't really know. It's just, this kind of just has me very perplexed. Maybe it's opened above that level so it can pump up, liquidate some people, and then magically the candle will change and be underneath. I don't know. But we'll watch that in up and coming videos, and let's see if we can all witness the candles just changing on the charts after the fact. Right, let's have a look at Sol. So firstly, just on the really low time frame, ever since we've had our bounce, came up here, consolidated for a bit, wiped out the longs that figured that this was a support, and now we're down here. Now, every time I see this kind of flat consolidation like this with a lovely big air gap above it, I typically think, okay, well, people are going to open longs. They put their stops down here. Anyone who's bearish, they're going to have their stops up here. We've done the dump, taken the longs. It is possible. What you're seeing right now is actually the because you can see the sort of bigger volume area down here compared to through that consolidation. So the consolidation, almost no volume. Then the bigger volume area down here. It's almost like this may, in the next couple of hours, come up here and sweep this. And likewise, it could be in reverse as well. So they might want to actually create this, look really bearish, get all the shorts in, and then push up into the shorts, and then basically open their shorts up into this. So yeah, at this stage it's downtrending, but yeah, structurally this looks like almost like a table that's been set up for somebody to open positions below and above. So if we have a look at the 1 hour, this thing to update. So yeah, really big gap on the 1 hour. We've created an origin. So first bounce of the origin didn't engulf, so no range. Then we created a range to the downside, and we've had the short off that range. We've hit the origin again. Now we are heading up. Now, if this hourly candle engulfs fully this prior one, then it may try to create that range to the upside to take out, what we just looked at on the lower time frame. And there's enough time left in the day to do that sweep. If it stays down here, then bearish, and it's probably just going to keep trying to work its way down. So you could look at this and yeah, so we're still above the 1618, but yeah, if we close any of these hourly candles start to close below this 101.211, then you've got this small range being created to the downside, which takes us to the 99, 97, 95 levels. So that's kind of much like this one, which was created previously to get us down to where we are now. So we're just sort of holding that range there, and that's kind of just keeping this price on the hourly around that 101. So you can see you just bounce below, come back up, below, back up, below, back up. So you can probably keep an eye on either the complete loss of that range, so closes below 101, or you could come down here and look at the newer range that's being created and look for closes, funnily enough, also below 101. So once it starts to get below 101, you've got two things. You're losing the complete move of the top, and you're also got a new range that it can just keep going down in. So, and if you want to crystal ball gaze possible futures, a full engulfment and close of this candle, if it does that in the next 18 minutes, can get you 104, which has good confluence with a break origin retest. Or it's actually, yeah, that is break origin retest. And then 107, 109, which would be a sweep of all of those shorts that people would have opened up and have their stop losses sitting above that. So that's what we're looking at there. Let's have a look at 4 hour. So there's not a lot of information on the 4 hour. You can see we're below the 4 hour origin, the older one, and most likely outcome, if this 4 hour candle closes down on the prior accumulation candle, then guess what? You're going down. So that's crystal ball gazing for the future. You can create a range off this, and doesn't have a lot of confluence with this 96.8 origin, but it doesn't really need it either. It's if it closes under 102.249, then it can just come down to there anyway. So that's or it can actually just go down there now. It's already rejecting off it. Okay, daily. So this just is kind of in the middle of nowhere for Sol, rejecting. Hasn't touched the support yet. It just looks like it's a trap. This is that 106 key level. So this 106 level is basically it's a daily hold which has been broken, so it's almost like it's acting in reverse. It's a range level from a really old range as well, and yeah, it's also an origin level on the daily, so it's effectively just rejecting that in the bigger picture. I can't see, unless there's some kind of magic soybean tweet, as I call them, I can't see that just reversing. The trend could shift to the bottom of the candle. Maybe that gives it a bounce. There are possibilities that could give that a reversal, but at this stage, it just looks like a delayed reaction to come down to the like-for-like support. Maybe they're just waiting for more people to open longs. Maybe waiting for BTC to be in the right spot. Yeah, let's see there on the daily. Weekly close. Could be waiting for weekly close. That's another option, really. So we are underneath the 109 origin, and we're above the 100.412 origin. So, we're below the trends, we're below the downtrend, the resistance trend, we're below the support trend. This has just been grinding down, from that 106 range level, because I mentioned that was a 106 was also a range level. So where do we go from here? Well, there can be various degrees of bearish close that can happen here, and there can also be recovery before the end of the day. So if we were to close under that 100.412, that's pretty bearish intention. They're pushing it through two origins, closing under the next one. More than likely at that point you get a nice violent dump. Now the 106 weekly range level, that can, any kind of revisit of that after weekly close can also then just reject all the way back down to 89. It can push through these levels, because these two levels that are lower down here, like the 95 and the 93s, they're just break levels. So, it would be pretty bearish and very trappy if it closes under 100.412, sweeps up into the range level, backside of the trend, and any of these retests to the upside, rejects, and then pushes all the way down to 89, which is a very, very possible outcome. If you wanted to put your bullish hat on, the hard closed origin today is this one up here at 120.487 on the weekly. So your bullish hat would be that it can bounce if it stays above the 100.412. It can bounce all the way back up to that. Super bullish hat would be it, soybean tweet. We drive through there. We get above 128. In the next week, we close. We create a range. We go flying to the upside and all that kind of jazz. But that's kind of at this stage, that's the least likely scenario. Okay, let's have a look at these other time frames. Right. Now we do have a 2-day, let's see, is it a break? Yeah, it's a break. We have a 2-day break level sitting here. Come on, laggy computer, catch up. Whatever the level is, we're just underneath it. Let's see, here we go. 101.183. And now we're just above it. So we're just bouncing around that level. So we do have a 2-day break level. Closing below that could trigger another push to the downside. Closing above that, well, the origin level on the 2-day is all the way up at 117.5. So if it can convert to an origin, that's potentially where it could go. But it is also under the range trends, and it's under the downtrend, and it has to do it fast, because the longer it takes, the more days it takes to do it, the closer it gets to the resistance trends, and the less likely it is to actually be able to get up there. But it gives you a bit of an idea about the drop. So snuck below the level, instant rejection, dump. Okay. Only difference is that this was a 2-day origin at the time, not a 2-day break level. So yeah, this is the kind of insta dump that you can get when you just park just under a level. You hit it, bang, and it comes all the way down to the next break level. Like I say, not an origin level yet. So, but a close underneath that, very bearish. A close above that, maybe first signs of some kind of liquidation of shorts. Okay, 4-day. Matrix has you. So 4-day long to the minimum 1618 played out. That's all gone. And yeah, this is just down in the dumps, really. Got a break level around 108, which it's below. It may go back to retest that. There could be, well, there are some older origin levels up in the 120s, but problems with running out of things to actually create bounces off, having to start to look very, very far back to find any kind of support. So that's not, there's nothing really there on the 4-day that jumps out. In fact, it's just missing a whole bunch of candles. Go figure. Right. Maybe just switch the pairs. Okay. That's better. We got below break levels. Okay, so it's just kind of holding the origin, which is about 98. So as long as it stays above 98, you might get some kind of bounce off that level. So as long as they don't push it down below 98, where would that bounce be? Let's see. In 108 would be the closest break level that it might head to. So yeah, there's a few signs there. Any kind of dump down to in the next 2 hours under 98, just throw that bearish hat on again. That's 4-day. Okay. 8-day. Looks like we're just sitting just above the 8-day origin. So that's that same level, that 100.412 level, the same as the weekly level. Range trends, up here at about 109. That's actually pretty confluent, with bouncing between the 100 and the 109 area. Also quite confluent with sort of what those lower timeframes are looking like, as far as they seem to be trying to induce people to take shorts. So yeah, maybe a bounce. Okay. And 16-day. 16-day has a range resistance level at 109. Surprise, which would try to send the price down to 70. So that's pretty epic. Maybe they are going to bounce to 109 and then just take an absolute dump. We've got a hold level up there. It hasn't been tested in the 120s. We've got 118, 121. These are all levels that will become resistance effectively, because this will be a hard close of everything 118 and above, based on the loss of that May 2024 origin. So it's a hard close of that. So yeah, any move to the upside is going to run into some pretty solid resistance. But just looking at this distribution range, it was a nice little bounce there off the first level, down, hard close, retest, rejection off the second, down below currently. So we haven't hard closed. I guess that's the only thing that says it could come back, but yeah, it could just go to 109, confluent with what we've just seen on some of the other time frames, and do a bit of a sweep, hit that, and then really go down to Goblin Town. So be watching if it goes to 109. Don't open along at 109. Please don't open along at 109. I think we already looked at the weekly, but just in case. Yeah. So you can sort of see it starts to come together. If we can close over 100.412, then we're below the origin of 109.417, so that's roughly lining up with the range levels, etc., on the bigger time frames. So may push up into that and then reject back down. Okay. Recapping on the monthly. There isn't really anything on the monthly that suggests a rejection from 109, but that, yeah, maybe I'm missing something. Okay, kind of just opened in the middle of nowhere and started pushing down. Still interested to see what happens when we hit these lows. So things like the 16-day time frame, it's got a range level that it's going to want to go to, which is down in that $70 area. This has got moves down to the 89 area that it wants to complete. But before we get there, we've got things like range trends and break levels, etc., which could convert it. We also closed above the body of the hold. So this candle on the monthly did close above the body, not in the body. So that shouldn't be, that 101 area at this stage, not for another month, shouldn't be resistance. So this could get bullish and it could come back up and test the 117. It's possible, or the 120 once it bounces off the range trend. Okay, let's have a look. What else we got? 32-day. Now this is inside the hold, so this is very bearish. 32-day close, inside hold level. So yeah, definitely not ideal. 19-week, there's a big one. This is potentially going to be the bear market range. Very possible. 125.919 would be the one level of the range, and $47 would be the 1618. So yeah, let's end it on that one, eh? Let's have a look at BTC. Okay, so BTC 15-minute. It's very similar to Sol. It's built a top up here around 79.5. It's looking a little bit weak down here though. It's broken the original origin of the range. However, it did create another one, and it's just looking at the moment like in the next 9 minutes, maybe it will try to create a range from down here. So could be looking to bounce up. Mostly little to no volume through all that consolidation, and then the volume has started to come in just down here. So yeah, it does look like it might try to have a bit of a push. So 4 hour, still stuck under trend, ranging down. It actually, like I say, it looks a little bit more advanced. Sol is kind of making a decision now as to whether it does this dump, whereas BTC looks like it's already made that decision. So it's come back to rejected the range level on the trend. Good confluence. Great way to find a short, by the way, folks. and then moved trend but opened under trend. So that's next step down to the second range level, down to that 76, and it's just trying to bounce back up from there now. So if the next candle opens under trend, it'll probably just push down some more. Might be worth keeping an eye on that 4-hour origin there though, down at 75989, and the next one's down there at 75051. Once we start getting down into these kind of numbers, or even if we hit this, well, hopefully we don't hit this 74195. Hitting 74195, which would be the complete 4-hour distribution range that's currently in play, that actually takes out the break level or hits the break level for basically every single high time frame long that is on BTC. So hopefully it doesn't quite hit there. Bouncing off something like this 75051 origin, that still leaves those longs intact ever so slightly. So let's see what this daily looks like. Yeah, so daily just bounced between the origin and break. Any close below 76562 would be very bearish, very bearish, and I can totally see why they'd do it. They've got lots of levels to retest down there, even stuff down in the 50s. There's actually a lot of stuff now starting to pop up in the 50s. So it's just a case of, do they bother to take out any shorts before they do this, or are they just going to go there? That's looking at the weekly. Okay, oh boy. That's not where you want the weekly candle to close. So weekly distribution range. This is the level that it's kind of bouncing around at the moment, is this 77,454. And then we've got the weekly origin there at 76,562.9. And we're halfway in between. That's a horrible place to close. It doesn't really tell you what comes next, because it could just move up just a little bit, revisit the 77.4, and then reject, and then continue down, pushing through the origin, and it could go down for a week. And this is like when we had our very first Trump dump, and what most people didn't expect is that it drove through an origin level and it spent 6 days, down at the lows. And on the 7th day, he sent some other random tweet and the thing just shot back up and went back above the level. So this can do exactly that. Like, it can open in between these, reject off the range level, come all the way down here, hit these 69s or 67s. It can hit sort of anything down here. It can retest the range trend, and then somewhere in the next 7 days actually end up coming back up. So it's it's a bit of a horrible place to close. Now if it closes back up above 77.454, then they are probably going to try and sweep and take out the shorts, and that could take it all the way back to let's see, 80 would be the most bearish bounce, and that's the prior broken trend. Then 81, then 85, those sort of levels. So yeah, pretty important to watch where that closes. Plus, I would also just suggest check it out on a couple different charts, because some of these closes that are happening lately, they are so close, like they are $1 or 10 cents, those sort of numbers. And when that happens, sometimes you might find that some of the charts are above and some are below. So just keep a bit on that weekly. Quick recap on the monthly. So this is something I've looked at a lot in the last 24 hours. So we've got this minimum obligation short on the 4-month, and the target is 75,330, and we haven't actually hit that 75,330 level yet. Yeah, so looking at things like to see where I can find it. Going through all the Binance charts and everything, it's all the same. We haven't completed this move based on the exchange charts, but if we look at the market index, this is complete to the cent. So it's a little bit of fun and games going on here. In which case, maybe that 4-month sell pressure is over, and you just don't know it. Looking at the various exchange charts, I can just see we're absolutely pumping now too. BTC's gone up $1,000 in a few 1-minute candles. Okay, so that's the monthly. Let's have a look at some of these other time frames. Okay. Get to that one. So 2-day really needs to get back over 78.6, this area here, and definitely needs to be back over 78.217. Otherwise, that's closing below levels, and hasn't quite hit that 4th level of the distribution range, which would be 75,319. Okay. Four-day is kind of in the middle, and you'd sort of expect that it is going to want to bounce between 74466.4 and 81112. Problem is, if it hits that 74, then like I said previously, that 74466 is the break level for everything high time frame. So yeah, that's not looking flash. Now it's probably going to be a couple of ranges in play here as well. So below 79, it's going to want to push to 72, and below 78,713 is going to want to push to 74,185. So it's all, very bearish. Unless it gets back up over this 81 level by close, it's very bearish. Okay, looking at the 8-day. So it's hit the 2nd level of the 8-day, closing under 76,559, super bearish. Closing where we are now, it does have the ability to have a bit of a bounce, but it's just going to be bouncing into resistance. To make this into a bullish close, it has to get back out of this whole area. So whichever way you look at that, it's 83,777 is the break, 83,428 is the range level. We've got a range trend that we're under at 81.7. It's got to get back over that stuff if it actually wants to be any kind of bullish close. Everything else is pretty bearish. And could you get a bounce? Yes. If it closes under that 76.5 or 76.6 area, this area right here, then it's in the next tier of both of those ranges. And that's then 69, 68s, 62s, 59s. So that's looking. This thing really needs to make a choice. It's at the bottom of more or less everything right now, and it's either just going to have a bad close and it's going to absolutely dump, or it's going to maybe do a sweep, come back down and do a dump. Just depends how long they want to drag it out for, I guess. Suppose there is the option that it does a sweep and stays up, but I'm not voting for that one just yet. Okay, 16-day new hold resistance up there at 87. It's looking scarily close to the break level. New range will get created. We're already inside the hold. Range level at 81. Next range level at 70, then 60, then 50. So these levels are pretty good levels. Like they show retests at level 2 would be retests of all this untested ranges back in here that are all broken. So we know from experience that that's the kind of stuff that price goes back to. Level 3 is looking at the hold of the prior range. And level 4, don't know. This is something further over here. But yeah, I don't know what level 4 would be. Okay, so that's looking pretty bearish. Well and truly under trend. It does have the ability to move a wee bit before hitting the trend again. Let's see what this is. All right. Yeah, I mean, it could go back to 79. That would be like the most bearish sort of scenario based on that 16-day chart, is that it just comes back and hits this interior trend and rejects off that to continue down and break the break. But that's looking pretty bearish. Okay, weekly close. Don't know whether we covered that previously, but yeah, just in between. Okay, 32-day. So this is creating a hold level, creating a distribution range, sitting really close to the break. And it's going to shift a trend. This stage it's going to open right on it from the looks of it. Yeah, it's just doing the typical tease. So if it comes down $1, it's below it, go up, $1 you're above it, that kind of thing. So once that trend moves and breaks, the most bearish thing is just an instant dump off the backside of the trend, which it's really close to. If it pushes back up a little bit before close, then the most bullish thing is a bounce off the trend and then come back up to the hold level or the range trend. But that's sort of 82, 85. You're also going to introduce a bunch of range levels. One of them here at 81.6. So, and we're, as long as we stay above that 76.215, we're below that pivot. So if we go below that, then another reason to go to the 70s and the 65 areas. Yeah, pretty important close this actually, because if it just hits the backside of that trend and then breaks all that, then yeah, down it goes. What else is there? And then just looking again at that that monthly, which is just in the middle of nowhere. Okay, right. Hopefully people aren't too confused by that, but it pretty much just looks really bearish. Everything looks really bearish. There's definitely the opening there for a sweep to the upside if they wanted to take out some of these shorts. But depending on close, it may just literally close and just bounce straight off the backside of a trend and then just keep on heading down. So options in play are either go get some shorts and then a bit of a delayed response. People chase it, long start pouring in, rolls over, goes down, would be the most likely crystal ball guess. or the other response is no delayed response whatsoever, and that's just open the candle under a bad level, dump. So it's yeah, it doesn't look doesn't look wonderful. And just looking over here at that 4-month, the first thing that rejection off the backside of this 4-month trend and this hold level is going to need is it's going to need some kind of horizontal support, and that's going to be like 72 or in the 60s. And then of course you've got this hard closed origin up here, so doji followed by a full nice bodied hard close, so you'd sort of expect it to be, you know, coming back down here to the 60s at some point. But yeah, that's got 3 months to go on that candle, so we won't worry too much about that. Now, we're still market closed on Tesla, and I don't think we'll bother looking at the others today. It's going to be really interesting to see what happens when the market's open for things like Tesla and MicroStrategy. They could end up with some really big differences to where they have closed, which, yeah, I don't think we'll bother crystal ball gazing at those, but wait and see how the market's open. And yeah, that's all. I might just also show people just a little bit of something interesting, because when you take a day off trading, you have a whole bunch of stuff you can look at. So I was poking around looking at a few different things, because there's just some stuff about the monthly structure that's just bugged me, like that 190 level on Sol that never got tested, and it was like it rejected and etc. But so I was starting poking around, and I had a look at the monthly market cap chart rather than looking at it as just, you know, dollar value of a token. I started to look at this, and you know, the first thing just to look at is, as you can see, and I brought this up in the Discord this morning, this was your previous all-time high for the market cap. That was last cycle. Now, if you actually look at that, you had quite a decent, you know, move above that this cycle. Now, it doesn't seem like that much because they just print so much of this token. It's just like handing out lollies at a lolly scramble. The validators just get given so much that like the price is always going to struggle to go up. So people talk about things like, you know, fiat currency always devaluing, but you know, the difference between something like Sol and Bitcoin is there is a fixed amount of Bitcoin, whereas and the price can, you know, go up and down because it can be bought OTC and sold on market, and vice versa. So there's great easy ways to shift the price around. But when you look at, and of course leverage comes in, and that creates cascades, you know, short squeezes or dumps into the long stop losses. So you can move the price around on anything, but when you're looking at levels and you look at something like Sol, the overall value of the Sol market cap is like Bitcoin. It's moved up considerably. However, the price hasn't, because they just keep making more of it. So worse than fiat, really, because it's 50% debasement in a cycle. Like if you actually look at that chart and then you sort of compare that to just how that looks from a dollars and cents perspective, they basically eradicated all of those gains from the dollar value. They're just not there. So you'd argue that pretty much at the same time this was pushing up, it was actually, they printed, you know, double the amount, and therefore it just went nowhere. So that's one interesting thing I was looking at. Now, from a trading perspective, though, what I found very interesting about this chart was how it conforms to the actual range levels. So there's things like this hold level here, which had a perfect touch and went down and hit the target. But if you ever look at this structure from a dollars and cents perspective, it didn't actually quite work like that. So, and I think this is possibly to do with the basement. I don't know, but you can see we never actually got into that hold level. Now we did dump. So if we take the same fib, put it here, never quite got up into the hold, but we did dump. Now, if you'd simply had an alert set on the market cap for the market cap entering the hold, you would have shorted this right here on the top, and then you would have taken it all the way down here. And yeah, okay, you would have TP'd not as low as what it did go, but heck, you would have got your entry. You know, so that's something else which definitely makes these things worth looking at. So then if we look at the distribution that we're currently in, so full range distribution, which is this one, we did enter. Now if we look over here, you've got our entry. So once again, if you just entered on the entry, you would have come down, hard closed under the level, added. We've never gone back there. We've just dumped. So it's almost as if this thing has just been printed so quickly that it's, or so much of it, that it's just really messing with the dollar value structure. So I've been watching that. So then this is where it gets really interesting. Now let's think about what could happen in the future. So we look like we are under this origin level, and that was a very weak bounce, you know, off an origin. But it is possible we're not, because over here we've only just touched it with this candle, and now we've closed back up inside of it. So I would suggest, if you've got Sol, particularly as spot at the moment, and you've been holding on to it, and you are thinking about, you know, what's going on, it would be worth putting an alert on this chart, so just on this market cap chart for Sol, and see what kind of bounce happens the next candle that hits this origin. Okay? And if it was to, you know, head on to the upside, the heading back up here, which sort of gets it to about the 150 mark, would be the maybe not 150, it'd be 140 something. It'd be about the top of that wick. So getting it up to about 147 might actually be where it heads. So that's something I've been just keeping a bit of an eye on. I looked at it yesterday and thought, oh yeah, this looks a little interesting. Yeah. Oh, hope you enjoy that one. And we'll catch you again on the next one.